Best job growth in the year ending Q1 came in an unlikely part of the country, and that's driving apartment revenues at a surprisingly brisk pace. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, the Reno update. Reno fancies itself as the biggest little city in the world, but even among apartment investors, it's been an afterthought of a market, even among tertiary metros across the country. But Reno is starting to make a little noise, and it's all stemming from what's occurring in the local economy. Reno has shown some remarkably good job growth of late. In the year ending Q1 2014, Reno added nearly 10,000 jobs. That amounted to an expansion pace of 5.4%. That was the #1 performance in the country, the tops among the core 100 metros. How many of you pegged Reno to take that top spot? So what's fueling all that? Well, a big part of the story is that even prior to the recession, Reno's been working hard to reposition itself as being more than just a second-tier gambling town. And that's starting to pay off. In areas like Las Vegas, south of Reno, a lot of the jobs have been coming back in tourism and gambling-related industries. But in Reno, the job growth has been pretty diverse. In fact, Reno's done a good job adding jobs in areas like back-office technology, data centers, and logistics. And there's another important distinction that makes Reno stand out from Las Vegas. Reno wasn't building a whole lot of single-family homes and apartments in the 5 to 10 years leading up to the recession, leading to that big housing bust. And so the housing market and the apartment sector have been able to recover at a better pace than what's been seen in Vegas and some of the other bubble-busted markets. Now, the real headline grabber, in terms of how all this is playing out in the apartment market, the real headline grabber has been rent growth. Same-store rents for new leases surged 7.3% year over year. Only 6 metros among the nation's core 100 did better. And while that's surely a blippy number destined to come down, it has been driven by strong progress in all submarkets and product segments. And so the good news is it's not being driven by any one segment. Additionally, occupancy rates have long since recovered and are in good shape right now. As of Q1 2014, occupancy came in at 95.6%, up 130 basis points year on year. And as with rent growth, occupancy rates are strong across the board. Every submarket and product age group posted rates right around 95% or better. So the obvious question is, can Reno maintain this pace? Well, of course it can't. The job growth pace is certainly unsustainable, and even if it was sustained, it would take more than 2 years for Reno to recover all of the jobs it lost in the big recession. So it's going to be a bumpy road. But if nothing else, Reno has shown that perhaps at the right price, it's worth a gamble. And that wraps up for Reno. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.